Hey everybody, welcome back to another episode of A Millennial's Guide to Real Estate Investing podcast. Today I have my friend Evan Holladay on the podcast coming out of Nashville, Tennessee. Thank you so much for coming on the podcast today, Evan.
Yes, thank you for having me on, man.
Absolutely. Yeah. Well, it was fun because I got to go on your podcast, I think a couple weeks ago, just went live yesterday. Now you're coming on mine, so it'll be, I'll get to know more about you. You know about me from going on your show, but now I'll get to learn a little bit more about you, and so will the audience. So let's start with that. How did you get started in real estate? And tell us a little bit about your story and your background.
Yeah, so for me, it really kind of happened in college. I tell people I was like, man, I'm going down this pre-med route, and I'm like, I hate science, I hate chemistry. What am I doing? Why am I going down this path? And I saw this development going in on campus. I went to University of Louisville in Kentucky. Saw this development going in on campus. I was like, man, that seems like fun. Like something about that just like drew me in. Like the energy just got me going.
Yeah.
I was like, I got to be a part of that somehow. And I didn't know what I loved about it, but I mentioned it to my mentor at the time in college. I was like, hey, that seems like a really cool project. And he's like, really? He's like, I know the owner developer. Let me introduce you. And that one introduction, he didn't just hand me a job, but he basically said, impress me, show me that you're worth hiring. And so we ended up bringing a few hundred people out to his groundbreaking. And after that, he's like, all right, you're in. I was the first one he hired. And it was $55 million development. I mean, he had student housing, retail, new market tax credits. I mean, this deal was crazy.
Wow.
And that was kind of like my crash course in college. I was 19 at the time. And just thrown in the deep end of like, hey, this is development, this is property management, this is tax credits, this is retail.
Yeah.
Learned it all. And then immediately was like, I got to do this, on my own with a group of us. And so myself and four others, we started a modular development company in college.
And what does that mean, modular development?
Yeah, so it's really, we're basically, instead of building it out on the construction site, like typically would, like framing it on site, we're basically just building boxes inside of a factory and then shipping those boxes on site, like Legos, just stacking them on top of each other.
Got it. Okay.
And so we actually took that a step further. We said, okay, well, there's houseboat manufacturing plants all over Kentucky. It's like a mecca for these manufacturing plants, and they laid off 1,100 skilled workers. So we're like, how do we put those same people back to work, use those same facilities, those same warehouses, and build housing instead of houseboats? And we used the same layout as a houseboat, and then ended up building a few single family, and was like, well, let's really get the economies of scale. Let's make the numbers work and go multifamily. And that's when I was looking for partners, looking for people with capital and equity, really trying to like figure it out, didn't know what I didn't know. And found a group, and they're like, well, how about you come work with us, partner with us, let's do deals together.
Yeah.
And so I really learned the ropes from them. They're one of the top developers in the country, and really found my niche and my passion in developing workforce housing and developing housing that is affordable for most families. And that's something that, you less and less you see that, where they're actually developing affordable price points where people that are making a working class income can actually afford a decent place to live. And so that really just got me pumped up and got me excited. I was like, you know what, this is my passion of like combining my love of development and building things and real estate and investing in real estate with also like having an impact and helping families that we're serving and marrying those two and being able to have massive impact on the world. So that's really where it got started. And now, this last year broke off and started my own company called Holladay Ventures. And so to date, I've done 1,300 units, over 6 developments. And also we've done the Monumental podcast, which we had you on. Phenomenal episode. And I've had a blast just learning from that podcast and growing that community and helping others on their journey to have massive impact.
Yeah. Wow, that's awesome. Congratulations on all that success you've had. So you were 19 in Louisville, and then did you go back to Nashville after you graduated, and then you started doing that houseboat kind of thing? Is that how you did it?
So I'm actually from like the Cincinnati area
Oh, okay.
originally. Moved to Louisville for school. Stayed there for 10 years, and then just within the
Uh,
last 2 years, moved to Nashville. Really because I'd been basically commuting from Louisville to Nashville to do a bunch of our development work here.
got
I was
it.
like, you know what? Like this commuting thing, I could get a whole lot more done if I'm in my market.
Yeah, yeah, yeah.
It can be done. I know you're very successful at out of market investing.
Yeah.
Um, but I saw, I was like, if I could be having coffee with, the landowners and the
Got it.
apartment owners every morning, then we could move things a lot more quickly.
Got it. And then once you moved, and that, when did you move back? When did you move to Nashville then?
Coming up on 2 years.
2 years. Okay. So made the move before you broke off and did your own thing?
Yeah.
Got it. Okay. And that company you were working for before, that development company, they were doing a lot of their projects in Nashville?
Yeah, correct. So I was mainly working with that group. We were working they're all over the Southeast, one of the biggest developers in the country, but I was focused in on Tennessee and Louisiana.
Got it. Okay, awesome. Wow, that's crazy. So now you moved, so then you moved to Nashville, you broke off, did your own thing. And then, so that's very interesting because I tell people a lot too, like they want to break into the real estate game. They're like, oh, I'm going to be a realtor. And I'm like, well, but what's your end goal? Oh, I want to be a like you. Oh, but I want to be a developer. I want to be an investor. I'm like, okay, being a realtor is great, but it's not a
No.
way to make like a quick 300 grand and then go and like start investing. They're very different branches,
Yeah.
right? So like the network with the realty side, sometimes it'll filter over to the investment side, but if you're a realtor or broker in LA selling $1 million houses, $2 million houses, cool, you'll make good money if after 10 years or so, but like it's not going to help you buy apartment buildings in Memphis at all. So like
Yeah.
I tell a lot of people to do what you did and like go work for a huge development company, learn the ropes and like literally
Yeah.
exactly your same model and then go and break out. Um, but I guess one thing holding a lot of people back is the point in which of like when to break away, you know?
Yeah.
And so what I guess answer that question for those people, like how did you know like your timing was right? Was it like your expenses were super low and like how did you just have enough money saved up in the bank to finally make the move or like what was you're like, all right, Evan, now's the time to make this shit happen or
Yeah.
like how did you know that it was time?
Yeah, and I want to touch on real quick. So you brought up a great point is like getting started in development and investing in multifamily. Like that's completely different than being a realtor and finding mentors. Like I always say it's 10 times better to be paid in education because now I know how to do developments, I know
Yeah.
how to do multifamily investing, and that's something nobody can take away from me ever.
Yep.
And I probably sacrificed a little on my income, but I made up for it tenfold in what I gain in experience and
Yep.
knowledge
Yeah.
and reputation.
Yeah.
Um, so I think that's a great point. I'm glad you brought that up. And then to answer your question, I think it really comes down to a couple different things. One, I had a mentor in my corner. I tell everybody, I'm like, number one on your list should always be finding a mentor and doing what you're doing, or at least somebody that can be keeping you accountable to where you want to be going. That's number one. Number two is, I came to a point where I was like, okay, I set a target date. I set a target income level that I was going to be making passively outside of my salaried job. And because of that, because I had that target date, because I had that income, passive income, and also because I had a mentor in my corner that was guiding me and helping me be confident in my action and my
Yeah.
steps,
Yeah.
those things led me to be like, okay, now's the time. I closed probably one of the most successful deals that company's ever done. And that really led me that was kind of my launch pad into starting my own venture.
Wow, that's crazy. And then the other thing is you're married, right?
Engaged. Yep.
Engaged. Okay. So then how did she take it and take the news and all that? Was she a part of the plan all along and she
Oh
knew
yeah.
about all these? Okay, she did. Okay. So yeah,
Yeah.
keeping them informed. Because that's another big thing too. It's like even if it's just boyfriend, girlfriend, or like even if they're just dating or they're engaged or they're married, it's like a big step of the other partner. So like for example, my parents and all their friends, they've wanted to make that jump, or even just to like start investing passively on the side. And even just doing that and putting in 50, 100 grand into one of our projects. I'm sure now you're doing your own thing. So you're seeing that a lot too, where you're raising money from folks and like, oh yeah, well, I want to do it, but my wife won't allow me to touch the money kind of thing. So it's like, okay, but it sounds like you had her kind of along the whole entire process with the goal and with the same mindset to achieve it.
A little bit of background on that. It's kind of crazy. I used to be under the mindset of, I'm driven, I'm a go-getter, I'm successful, I'm going to be successful on my own accord. And I think that helped me get so far, but I think my fiance, Janed, she helped even from when we first started dating 6 years ago. She brought into my life of the idea of like, hey, you should have mentors. You should be investing in yourself. You should be constantly learning. And so she kind of instilled in me that, and we've been on the same page ever since of like, you're making these big decisions together. You're communicating, and then also you're investing in yourself constantly to be better. And that's how you get to where you want to be.
Love it. Awesome. And then let's touch a little bit about mentor. So a lot of people do have troubles with finding a mentor, or like having that recurring relationship with a mentor. So tell us a little bit more about how you found that mentor. For me, a lot of my mentors like kind of fell on my lap, and just like opportunities presented themselves, and like you go out there and you fucking do whatever you need to do for that person, and now that's a mentor. And then because you did X for this person, then they constantly want to help you and help you succeed because you did help them. So how did that happen for you, and how did you find that mentor?
Yeah, I think it starts off with you figuring out what you want to be passionate about. Yeah. That's where it starts off with. I mean, I think that's where I've found the most success, finding my mentors on my path. And you as you grow, you get different mentors. And I think each one of my mentors came to me because I was passionate about something, and they had that skill, or they had that achievement or success in that area. And that's just what drew me to them, and they were drawn in by my passion.
Got it.
So I think it was a combination of that, just being curious, being curious all the time, like asking a bunch of questions, being involved in groups. That initial mentor I had in college who made that introduction, that was because of a fraternity I was in. He's 40 years old. I was 19 at the time. He had that relationship, and I was I guess fortunate enough at the time where I built that relationship, had lunch with him, took him out to lunch, just because I was curious. I was like, man, this guy's successful. Like, what is he doing? Like, I want to learn all the secrets. And so it's just being curious and being passionate. Yeah,
I agree. Yeah, my first mentor was back in college too. I was part of an entrepreneurship society, and then they had like all these entrepreneurship kind of job postings or free internships. Yeah. And then there was one, commercial real estate developer in LA. He's done over $1 billion and blah, blah, blah. I'm like, sign me up. Like, I know this was like kind of when I was first getting introduced to real estate. And then I found this guy. He was like 75. He lived down the street from my college, and I would go there every single day to his apartment building. He lived in an apartment building. There was some weird stuff going on that made me leave after. But it was still like just a great learning experience, even though it was a huge waste of time. Not a huge waste of time, actually. I think I still learned a lot, but he kind of screwed me over at the end. But whatever, I still learned a lot about how, and like met a ton of people, and like saw that even with these $100 million deal is no different than a duplex. It's no different. It's just different types of financing, different types of contractors you need with different licenses. But at the end of the day, this guy was taking these $100 million deals, and he would have 3 or 4 of them in progress at any given time. And he was still, his mind was calm, and he was totally relaxed, and he just put certain things in place to know that he could back out at any time and be safe and not lose everything he owned, right? So it was super interesting to see how these, like, because I think when you're in college, like, you see, for example, the $50 million development across the street, you're like, damn, this guy must, like, be just have like so much stress and like I don't know, you kind of come up with these things that you think these people are going to have, and then you go meet them, you're like, holy shit, this is just a normal guy that he lives over here, he's doing these projects and he's flying around and meeting people and stuff, and he's just been in the game so long that he was able to find success with it. So yeah, it is super interesting, I think, with how we think about these mentor people, and they're actually just, at the end of the day, they're normal people like me and you who just put in the work and put in the time and work to build it up, It's crazy. So what do you think about Nashville market right now, and what are your things this year? Are you guys still going hard with developments in Nashville? Are you seeing some softening? What are you kind of thinking with the way the market's going as well?
Yeah, so Nashville and really broadly the whole U.S., I think, we're very bullish on the niche that we serve because we're going for that middle income range. Got it. And still building brand new. We're doing that through public-private partnerships. We're doing that through tax abatements, tax credits. Got it. It's a long process. It takes a lot of extra work where you have to get buy-in from the community. You have to get buy-in from the city leaders. But at the end of the day, you're serving a niche. You're serving a part of the community that is underserved. Yeah. So there's lack of supply, and there's ridiculous demand for this.
Got it. I understand that now. Okay. Yeah, and then because even if there is some sort of market correction, it's not going to affect your kind of rent levels anyways. And then what do you think for those buildings, do you have to have a certain percentage of those units be Section 8 units or low-income housing, or is it Section 8 or is it just low income?
So, yeah, good question. So Section 8 is basically when somebody gets a voucher from the government, and then that will pay whatever they can't afford to pay up to 30% of their income. Got it. So somebody with a Section 8 voucher can live at one of our communities, but they also have to, meet all of our lease criteria, all of our community criteria. But we typically are financing these with low-income housing tax credits. We're serving families making $35,000 to $70,000 a year. So these are families making an income, but not making enough to be able to live in the core or live in a brand new community, which is both of what we strive to provide. Got it.
Okay, cool, awesome. And then how are you doing on your end? Are you doing syndications and raising a bunch of money and doing like a SEC Class D or something like that?
It depends on the deal, honestly. To date, the majority of what we've been doing has been with single investors or 1 to 2 investors that bring in the capital. And then we'll actually basically at some point take them out with tax credits. So we'll get tax credits from federal government, and we'll go to the state. Then the state agency will award that to our project, and then we'll sell those credits for equity investment to bankers or insurance companies or large institutions. So that'll be, on a $40 million deal, that'll be $10 to $15 million.
Got it. And then would Holladay Ventures still be the owner of that building, and then those big companies would just buy out that equity investor, and then it would be kind of you and the
Correct.
Oh, wow. Interesting.
Yeah. It's a really unique structure with the tax credits. But that's how you're able to offer the lower rents, is by getting the credits. And that's a $1 write-off for the investors.
Got it. Do those tax credits I guess walk us through very briefly like a top level view, because I'm assuming you have to go and buy the land, and then you have to go and get like the permits, and then you have to find the construction, and then you have to do the construction, and then so at what point in time do those tax credits come in? And I guess give us like a walkthrough of what a total project timeline looks like for us to kind of absorb.
Yeah. So I learned quickly that you have to have a lot of patience to be in development. Yeah. Because I came into it, I was like, man, I'm going to close a deal. Like, I'm going to close my first multifamily development in like 6 months. All the partners are like, whoa, like slow down there.
Slow down.
And I quickly realized, I'm like, whoa, like to find a good site could take you 6 months.
Yep.
And that's just the start. So really, you start with your criteria, where you're going, what your target is, same as any other acquisition.
Yep.
You start with that in mind. And then you have to basically build relationships with brokers, find the land, filter out the land, then put on the contract on the land,
Yep.
which typically you want to have a decent contract timeline, because you don't want to buy a piece of land until you have it entitled, till you have your financing lined up,
Yeah.
which both of those take a while. So we typically say on the front end, like the pre-development piece, which is basically finding the site, doing all the third-party reports. We have to do surveys, environmental reports, market studies, all these different things to basically prove out to that the site works and that the economics work, or the financing.
Yeah.
We have to line up an equity investor. We have to line up a lender. We have to line up tax credits from a state agency. We have to apply for those and then get awarded.
Doesn't that take alone a year, just the tax credit applying process?
Yeah. So that whole process that I'm describing, and that doesn't include entitlements and rezonings. Like Nashville, for example, all the multifamily land has been picked over because every developer in the country is looking at Nashville right now. So most of the multifamily sites have already been taken up. So anything you want to develop there almost certainly has to be rezoned, which adds a whole nother process on the front end of actually just getting it ready to be entitled.
Wow.
So without going too much into the weeds, that's basically like a 12 to 18 month process just to get it entitled, ready to build, and financed, and basically getting to that point where you're like actually closing on construction financing, closing on the land. So at that point, you own the land, you have the tax credits come in, and you start construction. At that point, from construction start to completion, that takes about 18 months.
Wow.
And then it takes about a year from there to fully lease it up.
Yeah. And then after that, you go and try to buy out that equity person by giving away tax credits.
Yeah, we sell the credits to investors who give us cash in return.
Got it.
And at that point, the loan stabilizes. And if we did everything right, then we have a cash flowing asset that will hold for the long term. There's a 15-year compliance period on the affordability, so we typically hold that long term. And our goal really is to hold everything we do and keep it affordable and just take it through the tax credit program again when it needs rehabbing.
Got it. Okay. And then are you refinancing once the property's stabilized? Keep going and getting a long-term loan on it?
So we typically line up our permanent debt by the time we close on construction. That's a requirement for the tax credit program. They basically say you need to have all your financing lined up.
Wow.
By the time you close on your construction loan.
Got it.
So we have we get forward commitments for 3 years out, more or less.
Got it. Okay. Yeah, because I was like, how are they gonna? Okay, so you just get a commitment letter from a lender 3 years out.
Yeah.
Is it then based on like getting this amount of rent and this amount of occupancy? I'm assuming all that kind of stuff too, right?
Yeah. They can resize the loan depending on who you use.
Yeah.
And a lot of times that construction perm is the same lender.
Okay, got it.
That's the simplest way to do it. But
they do a bridge to perm or something.
Exactly.
Yeah. Okay. Awesome. Wow, that's crazy. Because in Memphis, Tennessee, we had a building that had one of those tax credits things, and I think it was like for 30 years or something. So like I think they issued the tax credits, and then that building had to stay like that kind of class of low. Like even if you did renovations, you couldn't increase the rents beyond X amount of dollars.
Right.
So I don't know. Maybe are there different lengths then of that depending on the tax credit? Like some of them maybe like 100 years, or what have you seen?
Yeah, it depends on the state, and it depends on like if you are in a competitive application for credits, then sometimes they make like if you want to sign up for a longer affordability period, then they'll give you extra points.
Got it.
So it really just depends on the state. Typically, you're seeing most of them are now 30 years though.
Wow. Okay, they are 30 years. Yeah, interesting. Awesome. Well, that was very informative for sure. Jesus. So let's go. So finally, let's finish it up then. Finally, so from start to finish, from let's just say you found the land. So that's already 6 months in, let's say. So you found the land the first year in the permitting and getting everything ready to go. And then so closing on the land is 12 to 18 months, then another 18 months of construction, and then 1 year lease up. So you're looking at 1, 2, 3, 4, pretty much a 4-year process to get it stabilized.
Yeah.
Right. Wow.
Yeah.
That's crazy.
From finding a piece of dirt to stabilizing, we say 4 to 5 years.
Wow. That's crazy. That's awesome. Awesome, man. Well, tell everybody how they can get in touch with you if they want to learn more about what you're doing. I think there's a bunch of listeners who are actually in Nashville, so that would be kind of interesting. So what's the best way to get in touch and reach out?
Yeah, definitely. So biggest way is the Monumental Podcast, where we had you on there recently, and also Instagram, big way to connect. I'm very active there as well as you.
Yeah.
It's a great way to connect. And then website is evanholladay.com. And then our investing website is holladayventures.com.
Love it. Awesome. Thanks so much for coming on the podcast today. It was great to learn more about what you do.
Yeah, I love it, man.
Thanks
for having me.